Hello, this is Arthur with Oceana Estates. Have you ever wondered what is a mortgage or how to find the right lender? In this video presentation, we're going to talk about some key steps any potential buyer would need to take in order to obtain a real estate loan. In most cases, when looking for a property, one of the first key steps is to find the right bank or lender that you will work with in order to obtain a mortgage. The whole process may seem intimidating with questions around the down payment, rates, insurance and taxes. The most important thing to do is to learn the loan process and choosing the correct loan. With so much information online, it may seem confusing to many as where to start. In today's video, I will explain most of the key components of a mortgage so that you can confidently choose your best lending option. First step for a potential buyer is to get a pre-approved. This will serve as an analysis as to how much you can afford. This number may be an assumption depending on the value and location of the property. Furthermore, you would have to choose the type of loan you are looking to obtain. While a 30-year fixed may be a popular option, a 15-year fixed and ARM, which are adjustable rate mortgages, are becoming increasingly popular. Knowing your choices gives you the power to make a good decision. Allow me to explain. A 30-year fixed mortgage. This loan allows the borrower to know exactly what their payment will be for the life of the loan. While this option may seem attractive with lower monthly payments, remember that you are committing to a total of 360 payments, meaning that with this option, you may pay potentially more for interest. Now let's talk about a 15-year fixed. While this option is quite similar to a 30-year fixed, monthly payments will be higher, yet you are paying down the loan twice as fast, meaning that total payments for interest will be significantly lower. Now let's talk about an adjustable rate mortgage, or ARM. This is a non-fixed option that allows for adjustment in interest rates depending on market conditions. While at times this option may have a lower interest rate, that can all change as the market fluctuates. One of the main questions that we hear quite often is, how much do I need to save for the down payment in order to make my purchase? The common notion that we hear is 20% down, but that is not the case. Allow me to elaborate. A conventional loan. While this option allows you to put down as much as you would like, the minimum for a conventional loan is just 5%. FHA, or Federal Housing Administration, this is a type of loan that is a popular option for those who would prefer to start with a smaller down payment. With this type of loan, the minimum down payment is just 3.5%. VA loan. This loan is only available to United States veterans, offering options to purchase without a down payment and benefits around the interest rates, although the maximum guarantee amount does have a cap. Some restrictions and additional benefits may apply. What is important to know is that when you do purchase a home with a down payment less than 20%, the lender will require you to obtain insurance for the mortgage called Private Mortgage Insurance, or PMI. Although as you continue to make your payments on time and the loan-to-value ratio reaches 80% or lower, you may ask your lender to remove the PMI. Getting pre-approved by your lender may require you to provide specific documentation, such as your credit report or employment verification. Here are the details. Credit report. Your credit history should be in good standing. This will determine if you are a risk to the bank and may play a significant role in the interest rate that the lender will approve you for. Employment. The lender will require you to show proof of income in order to verify that you are able to pay back the loan. This will be in the form of your most recent 2 years of tax returns with W-2s, recent pay statements, and any other assets such as bank statements, retirement accounts, or investments. If you are self-employed, be prepared to provide 2 years of personal and business tax returns. It is important to remember not to accrue any additional debt during or before the mortgage process, as that will affect your credit score and the amount the lender can approve you for. Generally, it may take 30 to 45 days to process and close a mortgage loan. Not to forget that while down payment is important, a potential buyer must also prove that they have funds left over for the closing cost, as this may be between 2 and 5% of the purchase price. Furthermore, I would like to explain what a monthly payment will look like. As we have spoken so far, the mortgage consists of principal and interest, or PI. Yet in addition to the PI, the monthly payment will also include taxes and insurance, or TI. It is important to note that while mortgage payments may be fixed, insurance and tax may fluctuate. In effect, the full payment consisting of PI/TI may change from year to year. While everything we mentioned thus far applies to residents of the United States with a valid Social Security number, a frequently asked question is whether potential buyers living and working abroad are able to apply and get approved for a mortgage in the United States. In short, the answer is yes. The status of non-residents seeking to find lending in the US is called foreign nationals. And while they can apply for lending in the United States, their terms slightly vary from a resident. Here are a few details. A foreign national is one who lives and works abroad, does not have a Social Security number here in the US, and is not on work visa, yet does have a non-US valid passport. Potential lenders to foreign nationals may ask for income documentation from the country of origin, source of funds for down payment, and any credit references the buyer may have from their country. Lenders typically require a 40% down payment when lending to foreign nationals, and the interest may be slightly higher but not reaching double digits as with private lending. I hope you found this presentation useful, and now you know your lending options quite better. For more useful information, such as exploring locations, where to buy, or what type of home to buy, use the link below to download our presentation and subscribe to our channel.